All right, everyone, we're going to be doing two new things in this video. One, I'm going to be doing this entire video in one take, and that leads us into number two, which is I'm going to be counting the number of times I say and every single time I say I am going to put $1 in this jar, not during the video, but after. And when this jar gets full, after I do this on other videos, when it's full, I'm going to donate all that money to charity so we can have a little bit of fun trying to get me to stop saying when I record these videos. Today's video, we're going to be talking about which services or which brokerage accounts, which different online platforms you can use to start investing your money. There is a ton out there, there's a lot of noise, and it can be extremely stressful to figure out which one's right for you. So we're going to go through, there's 4 different things that we're going to talk about in this video for things that you can consider, or brokerages and online accounts that you can consider. So we're going to go through all of those, and each one is going to have different pros and cons, and it might relate to you, a lot for one of them or not a lot for another one. So the other thing I just want to mention before we kind of jump into those is that there's tons of YouTubers online. I'm trying not to be like one of them, but there are a ton of YouTubers online that talk about finance, and they try and make it seem like investing needs to be this really complex thing where you have to buy at the right moment, you have to sell at the right moment, you have to do options, you have to do crazy trading strategies, and you have to really be on top of everything. But I just want you to know that that is not how investing has to be. It can be if you have the time for it and if you want to actually enjoy investing like that. But if you just want to have a passive income stream, maybe you want to invest in dividend stocks, maybe you just want to put something in the stock market that can grow until you retire and you don't have to even think about it anymore. That is absolutely a perfectly fine strategy. I'm not trying to sell you anything. I'm just trying to give you some very unbiased advice based off my own personal experience and other things I've heard. But I just want you to know that if you do hear online that things have to be really complex or you have to join this platform or this platform, you don't have to listen to it. Investing does not have to be stressful. It can be something that you actually get enjoyment out of, but also just something that you can feel comfortable with and put money away that can then grow over the long period of time. So let's jump into the first idea here, and that is working with a personal financial advisor. So there's tons of different companies out there that have personal financial advisors. There's some big ones like Edward Jones, which you might have heard of, but there's also just normal personal financial advisors. Let's say like Merrill Lynch as well as another example. And basically what they're gonna do is you would take money to them. They might walk you through like a budget scenario where they're gonna figure out maybe how much debt you have, how much cash you have to invest. They're gonna kind of walk you through creating an emergency fund, and they're going to kind of create a plan for you, or a budget and a financial plan for you. That's why they're called financial planners. And at the same time, they also might make recommendations on how you can actually invest your money. So this is much more of a hands-on approach, someone that's going to work with you one-on-one. And by them working with you one-on-one, the thing to note is that a lot of times the fees for those personal financial advisors is more expensive than some of the other options that we're going to go through. That doesn't necessarily mean that just because there's a high fee, it's a bad choice for you. It's just something to consider. Just because they're working with you much more closely to actually develop a really personalized plan based off your situation, the price of that the price of those tradings can actually be a lot higher. So with the personal financial advisor as well, let's say they recommend that you invest in a few different stocks in an index fund. The other thing to mention too is that there's also going to be fees related to how often you're making trades. So with some of the other examples we'll talk about later in this video, you can actually trade on your own, and a lot of times there's no fee associated with buying a stock or selling a stock. With personal financial advisors or someone like Edward Jones, there are going to be usually like commissions that you have to pay every time you trade a stock. And again, that has a pro and a con. The pro is that actually maybe you won't trade as often, and that way you're not thinking about it, and that can actually just be more of like a passive investment stream that you have. The con though is if it's something that you do want to be more active, the fees can really cut into the gains that you have. So the first one is, as a recap, just working with a personal financial advisor who's going to look at your entire financial situation and be able to recommend some strategies on how you can save for retirement, how you can achieve other financial goals that you have, and just feel more comfortable and kind of pass off the investment strategy to someone else. The second one is, if I look at my notes here, The second one is Ellevest or Betterment. So Ellevest, Betterment, Wealthfront, there's 3 different options. There's a ton of different ones like that out there. But the main thing about Ellevest, Betterment, and Wealthfront is that they're what's considered a Robo Advisor. I actually did a video on Ellevest. You can check it out here. It goes in depth on Robo Advisors and on Ellevest exactly in terms of like what it actually is. But what these robo advisors do is it kind of takes what the personal financial advisor does, except that instead of them actually working with you one-on-one, it's basically going to ask you a bunch of questions when you get started, when you sign up for an account, and then they're going to use some crazy tech algorithms to figure out what those personalizations are. So essentially, it's using technology to take out that personal financial advisor and still give you personalized recommendations. The only thing to note with that is that sometimes they're not quite as personalized, but these algorithms are extremely smart, just like we know all algorithms, even the YouTube algorithm. And speaking of the YouTube algorithm, if you'd give me a like and if you'd give me a subscribe, I would greatly appreciate it. We're trying to hit 200 subscribers by the end of January, and I would absolutely love it if you would help me out. But these algorithms with the robo advisors, essentially what they're going to do, they might take into account your age, your income, the place you live, your employment status, and some of your goals or your risk tolerances. And they're going to actually recommend different investments for you, or they might actually just invest your money for you without you even having to think about it. And that can be a really big pro for a lot of people. You don't want to necessarily have to do a ton of research into which stock to buy, when to sell, when to buy, what's going on with the market. You can basically have the peace of mind to know every month, let's say I want to invest $100 in Ellevest, and I know that every single month they're actually going to invest that into something that's actually personalized for me. And I can feel confident knowing that the financial advisors or the people that are actually putting together the investment strategies at these companies are high quality, reputable, and someone that you can trust. So the second option is using one of those robo-advisor companies like Ellevest, Wealthfront, or Betterment. Almost forgot the third one. So that's the second one. I really think that that also is a great idea just because you can set your money in there and you can kind of forget about it and you don't really have to worry about it too much. So again, it doesn't have to be complex, and the robo-advisors can basically take a lot of that worry off from you. There are still some fees associated with those. Usually it's like a monthly fee. Sometimes there's also like an annual fee that actually takes into account how much money you have invested. So I know with Ellevest specifically, and I talk about that in the Ellevest video, they have an option that's basically $1 per month. And that pretty much covers all your fees except for some really tiny trading fees that also might come along with it. But it can be a lot less expensive than the first option, which was working with like an actual personal financial advisor, a human, who is actually then able to create those personal recommendations. So that's just something to kind of know about the robo-advisors. Number 3 is getting your own brokerage account. So the ones that I'm actually going to kind of mention here are Vanguard, you've got something like Morgan Stanley, Charles Schwab, and TD Ameritrade. Those are some big names that you'll hear. And basically a brokerage account is somewhere that you actually get to manage what you're investing in. So you have a lot of flexibility and a lot of choice to choose individual stocks, index funds, ETFs, bonds. You actually have the ability to choose where your money is getting invested. So essentially when you would go and actually sign up for these accounts, you would basically put in all your information, you'd route some money from your bank account into your brokerage account, and then you might be able to say, okay, I want to buy 2 shares of Apple, or I want to buy 10 shares of Tesla, or I want to buy 1 share of the S&P 500 index fund. But you actually get to make those choices. And the pro of this is that you get to make the choices. The con, though, is sometimes you can tend to overthink things, or you might just not want to have that stress of having to choose what you're investing in. So it kind of is a balance in terms of what your personal preferences are. Some people like to have more control of what they're actually invested in, but the con of that is that sometimes by you actually being the active investor with your money, you can tend to make emotional decisions that then actually might diminish your returns in the long run. So you can still definitely do that, and even if you want to have more of a passive outlook, you could still get a brokerage account like Charles Schwab or TD Ameritrade or Vanguard, and then you could still basically buy an index fund, which I also talk about in this 2021 investing video. But the index fund is something that you can just kind of, it tracks the entire market, and it's something that has a lot less like overall risk. Ooh, I just said it. I just said the word. So we're going to put $1 in there. I just noticed it. But it basically tracks the entire market, so it kind of spreads out your risk over a lot of stocks compared to you having to pick one stock that might be really hot right now and then having to stress about if it's going to go up or down or whatever might happen. But that's just one thing to know as well. And in terms of fees for those, so we talked about fees for personal financial advisors, for robo advisors, and fees for these online brokerage accounts. A lot of them have pretty much slashed their fees to $0. So you basically can make as many trades as you want, and it's going to cost you $0. And again, there's a pro and con to this. The pro is that it's $0. Everyone loves free. But the other con of this, or the con of this, is that by it being free, sometimes that makes you think that you should be doing a lot more with your money, and that then also kind of leads you to make some maybe not so great decisions that you wouldn't have made if there was maybe a higher fee, where you have to think, do I want to spend $10 doing this, or do I not want to spend $10 doing this? So with the brokerage accounts, because they're free, it can kind of be a give and a take, but it's just something to be cautious of if that is the option that you want to go with. And the fourth option is Robinhood. And Robinhood is the one I'm going to actually focus on here. There's some other ones like Webull and a lot of other like online kind of apps that you can actually trade with, but this is more of like the online trading apps. And Robinhood is actually skyrocketing in popularity. It's been around probably for like 5 years. There have been some issues with it, but in general, Robinhood is extremely popular among millennials and younger investors. And the main reason is because it makes it absolutely so easy to trade stocks, to trade bonds, to buy ETFs, to buy index funds, to buy options. It makes it so easy. And that also is a con. And it's actually one of the reasons that I personally don't really like using Robinhood that much, is it makes it way too easy, and kind of like what I just mentioned before, it makes you almost feel like you need to be doing more than you actually need to. So again, like a lot of YouTubers out there will basically say, oh, you need to buy this stock, or oh, you need to do all these different things with your money, and they'll talk about Robinhood, but it doesn't really need to be something that you consider like that. Robinhood, if you're using it right, can still be great because there's no fees associated with making a trade, but they've also made it like a social network where it shows you which stocks are hot, which stocks have gone up the most in a day, which stocks have been bought and sold the most in a day, and it kind of just messes with your brain, in my own personal opinion, in a way that it really kind of catches you off guard, and it makes you emotional about stocks, which is not something you ever should be. You really shouldn't ever try to be emotional about investing, because it can make you make poor decisions. So Robinhood has really great things just in the fact that it makes it really easy for you to get started. But in my own personal opinion, I don't really use Robinhood that much, just because the social media aspect of it makes you have a lot more emotion than you actually need to have. So let's just recap all of those, and then I'm going to tell you how you actually get started with those accounts as well. So we've got personal financial advisors. We've got the other option of the Ellevest and Betterment and Wealthfront, which are the Robo Advisors. The third option is having your own brokerage account with someone like Charles Schwab or TD Ameritrade or Vanguard. And the fourth option is the online, or the apps that you can use, like Robinhood and Webull as well. So how do you actually get started with these? If you're using a personal financial advisor, you can just reach out to some of those companies and kind of do some introductory calls. So Edward Jones, again, is one example that's out there. They have a lot of personal financial advisors, tons of different branches. You can just kind of do some introductory calls. You do not have to actually sign up with them. Just kind of understand what they would be able to provide for you and what the fees might be. And then for the other ones, like the online accounts or the app, basically what happens is once you sign up for the account, you put in some personal information, and then you'll connect your bank account with those brokerage accounts. And then you will basically be able to transfer money. Let's say you're looking at you have money set aside in your savings account, and you want to actually transfer, let's say, $1,000 from your savings account into your brokerage account, and then you want to buy an ETF, or you want to put it into the Robo Advisor and tell them, every month with my direct deposit, I want to automatically send you another $100 that you're going to deposit as well. So basically, you'll create a connection between your bank account and these brokerage accounts, and that will automatically basically pull into there and allow you to invest that money. So thanks for sticking around. Really appreciate it. If you like this video, would you be so kind to give me a like and a subscribe? Even comment below with what you think, if there's any other services or brokerage accounts that you use. And I will see you next time on Quinn Talks Money.